what we have here is a quick snap. We have to put VAT in context. And so the question is the taxes which form, part of the economy. And we are focusing on only the major taxes, So first of all, we have taxes on income and property. And that means taxes that are paid on income, and then if you own property, which is basically income is wages, salaries, allowances, and then also if you have property, rents, and then capital gains, and then for there's a personal income tax of this element which is paid by employees and self-employed persons. And then the second element of that is a corporate income tax. And the corporate income tax is one of the major handles, which we are going to focus on towards the end, of the. So that is the taxes on direct. It's direct because those who earn the income are the ones who account, for the tax. So we'll keep an eye on the corporate income tax, which because of oil, we separate into, corporate income tax, oil, and then non-oil. The Petroleum Revenue Management Act requires that all revenue from oil sector should be ring-fenced and paid into the petroleum holding funds. So that is. Then the second category is the indirect. So we have direct, indirect, and that is taxes that are paid on goods and services. The first one, obviously, is what we are talking about, the value-added tax. And these taxes are added to the price by those who are selling and pay, to GRA. So we use GRA, or for those of us online, whether it's Uganda Revenue Authority or Kenya Revenue Authority, South Africa, SARS, that's what we're talking about. So we have the VAT. The key word here is neutral. The tax is neutral. So when you consume beer, you pay the tax. Whether the beer is imported or it is produced locally, you pay the tax. So that tax is neutral. It's on both import and export. Goods, mainly, and then we also have the excise duty, which is also neutral. But what's the distinction? One is a general consumption tax, and is supposed to be very broad-based. Excise is punitive, and it's on specific, products only. So even though it's neutral, alcohol, whether it's produced locally or it's imported, you have to pay excise, in addition to VAT, right? The other, element is petroleum for environmental and other reasons, tobacco, but we do have it on bottled water and the rest, which connotes a bit of luxury, even though these days you cannot say. So that also is neutral, import, export. But the difference with VAT is that it normally has a higher rate, up to 70%, sometimes 80% is added. Then we have the taxes on international trade. We discount exports because it doesn't make us competitive. Cocoa Board collects some export duty in lieu of income tax by all farmers, a bit discriminatory because farm income is exempted. But then that is what is also used for cocoa roast and a few other. It used to go into the budget. It still goes in and out. But it's now known for cocoa roast and others. And then we have the import duty, which is discriminatory. Unlike VAT and excise, it is on only imports. So this is why we say it protects local industries. So if you produce, again, let's go back to spirits, alcohol, right? You pay import duty, right? But the guy producing pays only VAT. It doesn't pay import duty. And therefore, it immediately drives a wedge, between domestic and imports. So this is the context. So you can see why VAT, because VAT is neutral like excise, but it is not selected. It's not selective. It's said to have the broadest, tax base. And this is what makes VAT attractive. It has a revenue goal, a primarily revenue goal. But we do exemptions and things, to, move on.